Hello everyone, my name is Nicholas Reid from Reid Corporate, and it's my great pleasure on behalf of Liontown Resources to welcome you to this RRS special event, Kathleen Valley 2020 Pre-Feasibility Study and Beyond. Today's presentation follows the release of the updated pre-feasibility study for the Kathleen Valley project released earlier today, outlining a substantial increase in project NPV and mine life, as well as numerous other updates, improvements and enhancements which have positioned Liontown well and truly to become a significant second-generation Australian lithium tantalum producer. I'd like to refer everyone listening to this presentation to the ASX announcement on the updated PFS lodged with the ASX on Friday the 9th of October, as well as the separate PFS presentation. Liontown's Managing Director David Richards will shortly run you through this presentation, which you can follow via the synchronised slide deck provided. Once he's wrapped up, I'll take the opportunity to put a few brief questions to David to flesh out certain aspects of the Kathleen Valley project and the Liontown investment proposition. I'd now like to invite David to the podium to run you through the key outcomes of the new Kathleen Valley PFS and to tell us what's next for this exciting growth company. David, welcome.
Thanks, Nicholas, and good afternoon, everyone. As Nicholas indicated, I'll be running through the results of the pre-feasibility study that we've just released for our Kathleen Valley lithium project located about 400 kilometres north of Kalgoorlie. And I'll also touch briefly on our Morra project near Perth, where we've been getting some very exciting exploration results. The standard disclaimer, I won't dwell on this, but this presentation is available on our website. So if you do want to look at this page in more detail, I'd invite you to do that later on at your own leisure. Apart from Kathleen Valley, Liontown has two other projects in Western Australia, our Morra project near Perth, which I'll touch on later on, and our second lithium project at Buldania near Norseman in southern Western Australia. I won't be saying anything more about Buldania, but we do have our second lithium resource at the project. We've got about 15 million tonnes defined down there, and we've recently applied for a mining lease application over this resource. The PFS results from Kathleen Valley have produced some very encouraging numbers. An NPV of about $1.1 billion, an IRR of 37%, and an estimated life of mine free cash flow of about $4.8 billion over a mine life of 40 years. The project is very well located. It's in an active mining region, close to existing power and transport infrastructure. It's a low risk proposition. We have 100% ownership of the project. It's largely on granted mining leases, and it's located in one of the best mining jurisdictions in the world. Now that we've finished the PFS, we intend to transition to a DFS, and as part of the DFS, we'll be looking at a number of opportunities to improve the financial metrics. And these include some simple things like expanding the reserve and the resource, increasing the throughput of the operation from 2 million tonnes to 4 million tonnes. We're confident that based on the test work we've done that we can produce a premium concentrate at higher grades than most of our peers. And we're in the final stages of completing our scoping study on the downstreaming opportunities at Kathleen Valley. By any number of measures, Kathleen Valley is a Tier 1 lithium resource. By size, it ranks in the top 5 in Australia and it's top 10 in the world. Another measure of the global significance of Kathleen Valley is that together with Buldania, it means that Liontown owns the fourth largest hard rock spodumene or hard rock stroke spodumene lithium resource base in the world, which I think is a fairly significant achievement given that Liontown had a market cap of about $30 million at the beginning of 2019. The message I'm trying to get through about Kathleen Valley, it is a large deposit. This slide summarises the key metrics for the PFS. So based on a reserve of 71 million tonnes and a mining rate of 2 million tonnes per annum, we're looking to produce around 350,000 tonnes of spodumene concentrate a year and 430 tonnes of tantalum concentrate a year. And this should produce total free cash flow over 40 years of about $4.8 billion. One of the most significant outcomes of this PFS is that we've reduced the operating cost per tonne of spodumene concentrate in the first 10 years to $345 per tonne. This is a reduction of $140 per tonne compared with the PFS that we published in December last year. And we've been able to do this by redesigning things so that we access higher grade material earlier in the mine life. By keeping the OPEX down or low in the first 10 years, it means we're confident that we'll reach our payback period, or we'll achieve our payback hurdle, and also future-proof the project going forward. In fact, you could argue that at these prices, or these OPEX costs would actually be cash positive even at today's lithium prices. For the PFS, we've assumed a spodumene concentrate price of $739 per tonne of concentrate, and we've got this from a Roskill report that we purchased in September this year. The capex of $325 million includes a significant amount for pre-production or mine pre-production, and also about $30 million as a contingency. The project is financially robust. It is obviously most sensitive to the spodumene price. Things like grade and recoveries we're confident we will have under control. What it's not overly sensitive to is capex. So it makes absolutely no sense for us to cut corners when it comes to building a mill and developing the Kathleen Valley deposit. We can afford to get it right and make sure that the operation works correctly from day one. The PFS was based on an updated resource that we put out in May this year, and that resource was 156 million tonnes at 1.4% lithium and 130 parts per million tantalum. 80% of this resource is measured and indicated, and the reason that so much of the resource is measured and indicated is that it's a geologically robust deposit. It's very continuous and it hangs together very well. The resource translated into a reserve of 71 million tonnes at the same grade. And as you can see from this slide, it will be predominantly an underground mining operation. In fact, we'll start open pit mining. At the same time, we'll begin underground development. The open pit will go for probably 3 to 5 years, at which stage we should have ramped up production underground, and then it will be entirely an underground operation for the next 20 to 25 years, after which open pit mining will resume. It couldn't be in a better location. The project is 400 kilometres north of Kalgoorlie in Western Australia. It's in an active nickel and gold mining region. The main operator in the area is BHP. In fact, we base ourselves at the moment at the Mount Keith mine site. We have the Goldfields Highway immediately to the west of the project. There are a number of sealed airstrips associated with existing mine camps, which means we won't have to build another airstrip. So that'll save us money. There's a power line immediately to the west and a natural gas pipeline immediately to the east. And we're about 60 kilometres north of the publicly accessible town of Leinster. So all we have to worry about at Kathleen Valley is building a mine and a mill. There is no need for any extra infrastructure. As I mentioned before, we're now going to transition into a DFS at Kathleen Valley, and we'll be looking at a number of opportunities to improve the financial metrics. These include some simple things like converting inferred material into measured and indicated, which then can be converted to reserves. We can also look at expanding the resource. The deposit has been defined over 1,700 metres of strike, and we've intersected it down to a depth of 600 metres, saying that it remains open along strike to the north and down dip. Given that we have a mine life already of 40 years, we're not going to rush into expanding the resource, but there is potential to do so. As I mentioned before, we'll be looking at expanding throughput from 2 million tonnes to 4 million tonnes, and the PFS we've just completed includes a mine design or mill design where the front end is actually capable of taking 4 million tonnes up front. Our test work, and we've decided to go down the whole ore float test route path, has given us confidence that we'll be able to produce a premium concentrate with low impurities at a much higher grade than 6%. And if we can do this, then we should be able to attract higher prices for our product. A scoping study is currently being completed on downstream opportunities for the Kathleen Valley project, and we'll be looking to release the results of this scoping study in the next 1 to 2 weeks. Everyone's aware of the current situation regards the lithium price at the moment, but the consensus is that the longer-term fundamentals for the commodity remain strong. And the natural timeline at Kathleen Valley means that production is on track to be aligned with the forecast rise in lithium demand. And this demand is being driven by government mandates around the world relating to emissions control. And their main way of getting emissions down is to encourage people or to incentivise people to drive electric vehicles, and for electric vehicles you need batteries, and for batteries you need lithium. The timeline going forward, we've just completed the PFS and an updated ore reserve. We're now transitioning into a DFS, which we're looking to have completed by this time next year, and then we'll follow the normal course of events, with the plan being, or the objective being, to be in production in sometime in the first half of 2025. Kathleen Valley provides Liontown and its shareholders with strong underlying fundamental value. Morra, on the other hand, provides us with some exploration sizzle, which I think a lot of investors at this end of the market look forward to. The project is located in the same geological terrain as Chalice's Julimar discovery, which is located about 95 kilometres to the south. We acquired our tenements back in 2018 and 2019 as part of a generative exploration strategy. One of the reasons we picked the tenements up is that historic work had actually already recorded some very anomalous nickel, copper, PGEs and gold. Saying that, most of the project area has never been explored. Again, we own it 100%, and the project's located about an hour and a half's drive from the capital city of Perth. We've identified a number of target zones at Morra. The highest priority one at the moment is what we refer to as the Mount Ewell-Felton corridor. This is a 15-kilometre long, 2.5-kilometre wide zone with multiple coincident gold, PGE and magnetic anomalies. The geochemical work we've done to date has been extremely encouraging, with almost up to a gram of gold being recorded at the surface. And these high gold results are associated with elevated or very anomalous PGEs, nickel and copper. And it's not a one-off. There are multiple plus 100 ppb gold values within this corridor. So it has the same sort of signature that we're seeing at Chalice's Julimar discovery to the south. A recent EM survey, an airborne EM survey, has also defined multiple late-time responses, suggesting that we have potential sulphide-related mineralisation beneath some of these geochemical anomalies. Just zooming in on this trend, this is the northern end of the Mount Ewell-Felton corridor, and this is what we refer to as the Mount Ewell prospect. It's 3.6 kilometres long, 2.2 kilometres wide, and it has multiple high-order gold values associated with very anomalous PGEs, nickel and copper. Never been a drill hole anywhere near this place, and we're looking forward to getting in and drilling the first holes into this target later this year. So the plan at Morra, I should point out that we only commenced work at Morra in the second quarter of this year. So we've gone from zero to some pretty robust drill targets in a very short period of time. The next step at Morra is to do additional geophysics, mainly ground EM, just to tighten up the airborne EM anomalies. We've already got rigs booked, and we're looking to be drilling later this year. And we want to extend our first pass work over the rest of the project area. And the project remains, 70% of the project has never been explored. We have a fairly healthy budget for Morra, and we'll increase this if we get the results that we're expecting to get. So why Liontown? Well, it has the only independent Tier 1 lithium resource in Australia, probably the world. At Kathleen Valley, we have a world-class resource and a probable long mine life. Our timeline to get it into development is flexible. It's in a great location, in a great mining jurisdiction, and there are a number of opportunities to improve the financial metrics for the project. At Morra, we're located in an emerging and a very exciting mineral province, and our early exploration results have been exceptional. In fact, I'm willing to say in my 40-year career as a geologist, these are some of the best results I've ever seen from first pass exploration. And just a reminder, our projects are 100% owned. So just to conclude, just a corporate overview, very experienced board and management. On the board we have people who know how to explore, develop, mine, and we even have an accountant on the board. More recently, we've beefed up our executive team. We've employed Adam Smits. Adam is a very experienced engineer, and he's been responsible for overseeing the PFS and coming up with the very good results we've published. He's working closely with Craig Hassan. Craig has very strong financial skills, and together the two of them are tasked with turning Kathleen Valley from a deposit into a mine. Jamie Dale, Exploration Manager, has been with the company several years now. He was responsible for putting the drill holes in the right place at Kathleen Valley and now has the same job to do at Morra. Our cash position is about $5 million in the bank at the moment, so we're in a reasonably healthy position. And as you can see there, our market cap sitting around $380 million, which is about an 1,100% increase on the beginning of 2019. Thank you very much for your time, and I'm happy to take some questions.
So David, a couple of questions. There have been some big changes in this new PFS compared with the version that you put out in November last year. Can you talk us through what the key drivers have been in terms of improving the numbers and changing the picture for the project?
Sure. Really, it's been about grade and mining higher grade a lot earlier in the mine life. So, for instance, for the first 10 years, the average mine grade has gone from 1.1 to somewhere between 1.5 and 1.6. And that's really been the main driver of the economics, together with the fact that the resource was more than doubled between the previous PFS and this one. So not only did we chase or seek to mine higher grade earlier, we had actually a lot more of it that we could mine in this new PFS. And that really has been the main driver on getting those numbers looking a lot healthier than they were.
And Dave, what about the processing changes that you've incorporated? How important are they in terms of giving Liontown a competitive advantage over some of the existing producers, some of which have had issues with ramp up?
One of the advantages we've had, Nicholas, is that we've been able to learn as much as we can from our peers who have been mining for the last couple of years. And we were cognizant of the fact if we said we were going to do exactly the same thing as everyone else, then we had to convince people that we could do it better. And we thought a different way to approach it was to look at whole of ore flotation. And that's our test work. We did some test work and we decided to incorporate whole ore flotation into the PFS study. And we've done this for a number of reasons. The test work, for a start, it's simpler. It's much simpler than having two circuits, a combined DMS flotation circuit. We only have the one. The test work has also shown that we can consistently produce higher grades and higher recoveries of concentrate when compared with the DMS flotation approach. The other advantage, of course, going down the whole of ore float is that it lets us actually access all of the ore feed for tantalum recovery. When you have a DMS flotation circuit, the only bit you can treat for tantalum is the flotation circuit, so it immediately means you halve the potential amount of tantalum to recover. So combined with, so together it's simpler, it gives us better recoveries, higher grades, and it lets us access all of the tantalum. It lets us recover or access all of the tantalum and maximise the recovery of tantalum.
Fantastic. Now I have to ask you about underground mining.
Yeah.
Is this a first for the lithium industry, and what are the advantages of having two ore sources in a project like this?
Yeah, it's a common question, and I'm not sure whether I like it or loathe it. I'd like to make a couple of points. Hard rock lithium mining is a pretty new industry, and I haven't done a detailed study of history, but I would guess 10 years ago there was probably only two hard rock lithium mines in the world, that being Greenbushes in Western Australia and the Tanko deposit in Canada. Now Tanko is an underground mine and Greenbushes is an open pit mine, so based on that it's 50-50. Saying that, I think people need to start thinking about lithium like any other commodity. There's nothing special about it. It's just a mineral you mine, and if you can mine it for less than you sell it, then you'll make money. And we're not dealing with weird and wonderful mining techniques. This is very conventional open pit and underground mining. And the ground conditions are great. It's not difficult ground conditions at all, and it's a relatively shallow underground mine. So we don't see any hurdles to mining underground. And in fact, it also minimises or it reduces our environmental footprint, which I think more and more producers going forward are going to have to deal with. Having two ore sources just gives us the extra flexibility. It means we can be mining while we're developing the underground deposit, and just makes it easy for us going ahead. So multiple ore sources.
Thanks, David. Now, given the project is advancing quite rapidly now, can you tell us if you've had any engagement with potential customers and where your marketing strategy is up to?
Sure. Obviously, I can't say too much, but the short answer is yes. We've had a lot of conversations with interested parties, particularly over the last few months as the lithium space has improved. One of the big advantages we have now is we actually have a tangible study that we can talk to. And it's much easier to talk to people when you know what you've got and what it's worth and how to value it. So now that the study is out, we'll be putting a much bigger effort into following up those conversations and seeing where they go. So,
just a couple of quick questions on the Morra project before we finish, but
sure.
Before we move on from Kathleen Valley, just to sum up, what are the next steps there in terms of development, permitting, etc.?
Well, we have to finish the DFS. We'll get that done. We'll complete most of the environmental baseline studies. We've already started a lot of that work. That needs finishing off. And once we've done that, then we'll be looking at things like native vegetation clearing, water management plans, etc., etc. At the same time, we'll conclude our negotiations or our discussions with the traditional owners, and that's been going very well. So,
fantastic. A couple of quick ones on the Morra project. Obviously, it's a hot belt up there.
Sure is, yeah.
Lots of action with Chalice and others. Can you give us a quick timeline on what's next there? When do you think you'll have a drill rig on the ground?
We're looking to have a drill rig on the ground in December, and the only rate limiting factor there is we're waiting for the farmers to get their crops off. The farmers have been fantastic up there. They've been incredibly obliging, and we've been talking to them. So it currently looks like the crops will be off in November, late November, and then we're looking to be on the ground straight afterwards. So that's the timing.
And a few investors have asked me, does that project have the same potential for gold as it does for nickel or PGE? Or?
Yeah, absolutely. Yeah, I think the gold numbers are outstanding. And there's no doubt we're also seeing a very strong nickel PGE signature there as well. Not sure what model it fits, geological model it fits, but the numbers on their own are very, very encouraging. So we're really looking forward to doing the drilling and just seeing what we've got beneath the surface. This is an area that's completely covered. We were in fact surprised that the geochemical work we did worked, but it did work, and we're keen to see what things look like underneath those targets.
And the initial drilling program, roughly how big, and RC and diamond, or just RC?
Yes, we're probably looking at somewhere between 5,000 and 10,000 metres. It will probably be air core mixture and a lot of RC, and then we'll follow up with diamond once we get the results of that work.
Thanks very much, David, and thank you everyone for tuning in to listen today. As you've just heard, Liontown is a company on the move. It has a world-class asset at Kathleen Valley, it has other exciting growth projects, and it has the people, the vision, and the capability to unlock the value of these projects for its shareholders. Thanks very much for listening. If you do have any further questions, please feel free to contact David in the Liontown office in Perth. Have a good day. Thank you.